Hi there. This is a quick message from Munro Partners that this podcast is general financial advice only, meaning it is not specific to you, your needs, goals, or objectives. We suggest you don't act on this information until you've spoken to your professional financial advisor. You'll find our full disclaimer linked to our financial services guide and website in the show notes below.
Welcome to episode 4 of the Investing in Climate Change Leaders mini-series on the Munro Investing the Journey podcast. My name's Mike. I'm Munro's responsible investment manager, and I've been lucky enough to be sort of leading some of these episodes. If you haven't listened to the first 3, I do recommend you check them out. So the first was on the landscape for investing in climate change leaders, or in the sort of decarbonisation theme. The second one was all about batteries and CATL, which featured our CIO, Nick Griffin. And the third one was on the ground in China, where we follow our analyst Tom Paul through his trip to China to check out some of the leading clean tech companies. Today's conversation will be a little bit different. It's a conversation with Milla Craig, which we did via Zoom between Australia and Canada. So Milla is a real veteran of responsible investment in Canada, which is a broad term which includes climate change, obviously, which is very dear to us given our focus in that area. Milla is the founder, president, and CEO of Millani. Millani advises both corporates and investors, including Canada's big leading pension funds, on responsible investment. So she's really talking to the companies that have the weight of money behind them. What do we talk about? Well, we talk about the question of, do Canadian funds really care about responsible investment, especially given what's happening with their neighbor to the south, as they call them, in the US, where there's a big backlash clearly going on in this area. Is climate change still important? What should we make of companies going back on some of their targets? Again, that's important for us because that corporate spending is what drives our investment. And at the end, we do a bit of a pivot to AI, to talk about AI, how are investors using it, what are they focused on when they're talking to corporates. So something a bit different, but a fascinating conversation with a very engaging speaker. So please enjoy my conversation with Milla.
I'm joined here via Zoom with Milla Craig. Milla, welcome to the Munro Invest in the Journey podcast. Really great to have you here.
Great. Well, thank you so much, Mike. Thank you for the invite. It's a pleasure to be here.
Milla, maybe just before we start, could you please just give us a quick introduction of who you are and what you do?
Perfect. Yeah. So I'm the founder, president, and CEO of an advisory firm called Millani. We specialize in the ESG, responsible investing, sustainable finance arena. It's been 18 years, going on our 19th year in business in this arena. Prior to that, I spent 15 years in institutional equity sales at some of Canada's largest banks and worked with institutional investors, our pension plans, our asset owners, our asset managers. And now we focus on supporting them with responsible or sustainable finance strategies, as well as public and private companies. On that front, again, building corporate strategies to be prepared for, as you, the investors, engage with the kind of questions that you might be bringing forward, et cetera. And with that, I think, we work with other boards and other capital markets organizations here. That's pretty much it, I guess.
It's a really interesting background, and you've really, I guess, sort of followed the evolution and the ongoing evolution of responsible investment and sustainability and so forth. So there's a lot to talk about. So maybe let's just start with, your organization does this annual survey of Canadian institutional investors. As you said, you work both with investors and with companies. And, many of Canada's large investors, they're really leading on the climate change topic, which is obviously very relevant for us. They're really leading on that kind of climate change, stewardship, and integration of climate change topic. Recently, we've been sort of hearing, despite our view that the large investors are really very important to continuing to drive, decarbonisation within the companies that they invest in, and also, within their own organizations and then within what they actually invest in. They have been like the key kind of driver of efforts to tackle climate change. So, in the current environment, you do this annual survey. What are the companies telling you?
So thanks. We do a lot of thought leadership, and so it's actually a semi-annual survey where we started this when COVID hit, and it was really with a view to what could we do to support in this communication between corporates and investors. As everyone knows, the whole ecosystem was moving in many different directions. So it's well over 5 years now, and we go out twice a year, and it's not a survey. It's actually a one-on-one individual interviews that we do. And the objective of this was really to kind of bring a uniquely Canadian perspective, which I didn't realize would be so valuable. As you mentioned, our market is quite different than perhaps our neighbor to the south right now. And, so there's been a few really interesting takeaways from the most recent report. And so maybe I'll start there, and I think it will help contextualize what we're seeing on the climate side. The title of the most recent report is that the backlash is backfiring. So, sitting here in Canada, our neighbors to the south, there's been quite a bit of a pushback against even using the word ESG. And, that it's, so even there, we wanted to explore what that means. And what's been really interesting was one, we ask questions around the commitment of these institutional investors to the integration of environmental, social, and governance topics into their investment process. And what we heard is that 97% of them are very committed and remain very committed. So even though we're seeing this happening south of the border, right? But the other part of what's going on in Canada is that we've also had a greenwashing law that was put into place, I'm going to say about a year and a half ago now. And what it's really done is it's made many corporates much more cautious about their communications and what kind of statements that they make publicly, even seeing about 5% of companies in Canada that removed everything from their websites, et cetera. We do a disclosure study. We look at all the disclosures once a year as well. So that kind of led to, well, what's really happening there? And ironically, what we're seeing is that, we're not seeing a significant change in the number of reports out into the marketplace. But before I get there, maybe I'll just take on the journey of, this backlash is backfiring. What we really saw is what we're calling the institutionalization of ESG. And what do we mean by that? It's really that, at one point in time in the evolution of these conversations, whether it's climate change or any other material topic to a business, investors, it was sort of the responsible investment team or the ESG team that was doing that. And on the corporate, the same thing. But what we've really seen is a shift here where now, because of this greenwashing law as well as the backlash, in the Canadian market, we really have seen that, it's the legal teams are around the table, the risk management teams are around the table, the legal teams, the communications team, and everyone is now involved with regards to, what the communications are, what kind of products you're putting out, whether, who's speaking where, et cetera. So it's really created a very interesting environment in Canada where we like to call it the fear of the accusations of greenwashing is something that is actually been driving the Canadian market. So with that, in our study, we always ask this question around what are your top 3 ESG focus areas? And climate change is and remains the top ESG issue that the institutional investors are focused on. And we've actually saw a doubling from June to December on the number of responses that we had, that climate change is the number one thing that they're looking at. So I think it really tells you the degree to which investors really care about this topic. And from what we've heard is from the lens of a risk management perspective. And I think that's the clarity that we're really seeing in the market. They're not looking for aspirational statements. There's been a stepping back from an
Yeah.
aspirational net zero 2050.
Hmm.
They want information, they want details, they want transition plans, right? They want to know what your CapEx is going to be. um, these are the types of things that we're really seeing. And so it's really becoming ingrained as we see this institutionalization of these topics.
Yeah. No, that's really fascinating and reassuring. And I think also there definitely some parallels to actually what's happening domestically in Australia. Like when you said in the very outset, 97% of these investors that you speak with sort of remain committed to, to pursuing efforts around climate change. And then you said as well that it's become even more important, perhaps as a function of the underlying kind of background is yeah, like really resonates as well. And we have seen, I mean, maybe we'll kind of get to like what the corporates in Canada are thinking about, but we have seen a little bit of that sort of green hushing amongst investors, and certainly for us when we're putting together our own responsible investment report and whatever additional investor communications that we put together, it's certainly in the back of your mind that you want to be honestly portraying what is actually happening, right? So,
Yes.
mm,
And, just on that is, even before we kind of get into greenwashing, there was one investor that said something really interesting that I just, I think it speaks to where we are in this cycle. And it was really that we as investors, you accept restatements by businesses all the time, right? When there's a merger or there's an acquisition or, like, you accept financial restatements. You may
yeah.
not like it, but you accept it, right? And,
Hmm.
and this is something that as we're going through this period of, and it was fine. At one point, the market was aspirational, but as we become more afraid of anything that could potentially be greenwashing. To hear, an investor say, we accept financial restatements all the time. Why would we not accept a restatement from a business related to climate? 5 years ago, you might have started to put this into place, and now we have better scenarios. We now have these geopolitical issues. We have all of these things happening. Would we not prefer the business to actually be up to date and feeling that, okay, maybe that target that we put out there, maybe we don't see that we can get there anymore. As an investor, I think part of that is communicating to the degree to which we want a plan. We want to be able to hold you accountable to some kind of plan, not this aspiration, right? And I think it's a really important thing to think about as we bring it to capital markets, right? Things change as we've seen in the first 3 months of 2026, right? And here in Canada, we've got this greenwashing bill. It's called C-59, and it really has driven the market, and to the point where investors, when we ask that question about what are your top three, for the first time, we've actually seen ESG disclosures come onto that list. That investors are concerned that they're not going to get the information that they need to be able to make appropriate business decisions. And,
Yeah.
we've been looking at those kinds of disclosures, as I mentioned, for almost 10 years. And it's interesting, even in this environment of the fear of accusations of greenwashing, we actually saw a higher number of reports coming out in 2025 than we had in 23 and 24. But it's not the number of reports, it's about the quality of the
Yeah.
reporting, right?
Yeah. Yeah.
And that's the important thing to take a look at. But what's really interesting, coming back to your previous question about climate, is that we actually saw that 64% of the companies in Canada are speaking to or are referring to these new IFRS disclosure frameworks that are being put into place, and that compares to 18% on the S&P 500. So,
Okay. Yeah.
64% versus 18.
Yeah.
That's huge, right? It really does demonstrate the degree to which Canadian companies are hearing that investors need this information, or that there's an expectation that they will move towards understanding these elements. And one of the other things I thought was really interesting is, in Canada, 65% of the companies have information about their climate scenarios in those reports. 72% are disclosing their physical and transition risks in their reports already.
Yeah.
So, as much as there's fears, you can tell that the work's being done, because, in this environment, you would not be disclosing this unless that work is being done behind the scenes. So it should give comfort, I think, some pretty strong comfort. There's always more to do, right? I won't say that things are perfect. But as an investor into this market, it should give you a fairly good sense of, corporates there seem to really be, doing the work to try to assess what these risks are.
Yeah. Yeah, and it's interesting, you were just talking about the IFRS standards, which is essentially for the listeners that don't know, that they're essentially a set of standards that now sit effectively next to the accounting standards for every country that uses IFRS, and it's being implemented in Australia as well, and it's interesting to sort of see it implemented in Canada. But what it sort of just made me reflect on, and Milla, you've been obviously in this industry and working with investors and company for a long time, but imagine kind of going back 10 years and telling yourself that this is where the standard would be. And I mean, certainly, I wouldn't have believed you if you told me 10 years ago that we would already have come this far. So it's actually kind of longer term. It's interesting to sort of, acknowledge that reality that we've come a long, long way. Even if, in the short term, there are a few little nuances that you've, so clearly kind of outlined.
Yeah, agreed. And, I often say that I was actually with a group of diverse age groups, shall we say, last week, because I do find that, there is some of the younger professionals are, sometimes feeling a bit disillusioned that it's not going fast enough. And I'm like, well, sometimes you need to stop and look backwards, because we have come a very long way. In my 18 going on 19 years, we've come a very long way. Doesn't mean we're there, doesn't mean that there's more to do, but we have seen, to see that 97% of Canadian institutional investors in our study say that they are fully committed to this. When I started, it was like, what are you talking about? So we've come a very long way. And and we live in a voluntary disclosure regime in Canada, right? These are still not mandatory. However, I think this is, again, what we're seeing is that we've come a long way, is that the investors see the value. The investors are demanding this type of information. So whether we're in a voluntary reporting environment or not, if you want your capital, if you as a business, you want the capital of investors, it's what's expected today.
Yeah, absolutely. I think we sort of touched on this a little bit, but I wanted to just turn the focus from what the investors are doing and saying and thinking to, the companies that they invest in. And I think you're in this absolutely fascinating role where you're actually working with both the investors and the corporates as well. And I did want to ask you, obviously that there has been this element of the fears of greenwashing or doing things that overstate environmental claims or whatever. There has been a little bit of that, and so and then obviously what's going on in the US, where I think it's been quite a firm stance from the current administration against what they perceive as being things that companies or investors shouldn't be doing. But I just wanted to kind of ask you, I have seen this like fascinating chart basically surveying US executives. I think it was like 400 US executives, and it asks them, how have your investments in sustainability changed in 2025? And really most of them said, like probably about half of them said no change. But the most fascinating slice of the pie in that pie chart was that around 30% are saying they're actually doing more, but promoting less, which I think speaks to a lot of what you just talked about. So maybe just sort of turning the focus to the corporates. in Canada, or I'm not sure if you work more broadly with corporates, but what are you kind of seeing from corporates? As you said, like that, there's a movement away from that sort of more aspirational, perhaps, kind of we will do net zero by 2050, and don't talk to us before then. Perhaps just some more kind of concrete, shorter term targets and things are slightly being changed. But yeah, I'd love for you to just, if you have any additional comments on what you're seeing from corporates, that'd be really interesting to delve into.
Yeah, and so I'll take, obviously take that from the Canadian perspective.
Mm,
And there's lots of lots of issues today, right? So I think, corporates today are dealing with how I've kind of laid it out is that the ESG, how we describe ESG is not how we used to describe it. It's no longer just environmental, social, and governance, right? It's, the E now represents environment, but it also represents the economy and energy, right? And in Canada, it might also mean exports, because our neighbor to the south has put on the table for Canadian businesses the conversation about sovereignty, and we, as a country, have been very reliant on the U.S. market as our biggest customer. So I would say, first and foremost, many Canadian businesses are very focused on how to diversify their client base.
hmm
And for some businesses here in Canada, Europe is the easiest place to look to. Um, there are some industries where I'm positioned here in the province of Quebec, where we have some of the lowest carbon energy, and business because of that energy. A lot of businesses can actually sell into some of the European markets and not have to pay carbon border adjustments, et cetera, because the energy being used is so low carbon. I would say the other thing that's top of mind, and I think it's top of mind as we record this today, is energy resilience, energy reliability. And we see that we've been watching and seeing that, and a lot of our corporates are watching that, and just seeing that and China in particular is an area where there is a lot of focus on changing the powers of energy. And I think Canada plays a very important role in that, in the landscape of, we have strong environmental laws. We have a strong social fabric. There's a lot of, like, it's the interplay of things that are, called under the E, S, and G umbrellas. And I think that's a bit of the change, and that's that's where the corporates are, trying to understand, where is the focus? Who are we? And I think similar to the US, they continue to do the work. It's more about, are we willing to disclose it in a voluntary environment? Do we need to? Do we not need to? We've seen in our own business a very significant uptick in material, but double materiality assessments. And we've seen that in our study as well about the degree, I think it's 40 or 45% of Canadian companies that disclose are doing double materiality assessments. So it really does tell you that businesses continue. It's really a question of how much are we disclosing versus how much do we need to do this type of work, and to be thinking about
Yeah.
the financial materiality of these elements for our long term in this period of uncertainty, right? That's what we're hearing more than anything right now is how do we maintain the focus in the right places, and how is it going to support the business?
Yeah, gotcha. And yeah, it is really interesting. Again, I think to what we were talking about earlier as well. I think there is this sense of, oh well, if a company is maybe no longer putting out, the very glossy 100-page sustainability
Mhm.
report, or maybe has said, well, we're changing this particular target, and they get accused, and I think sometimes it's a little bit unfair. They get accused of, not doing anything or giving up and all of that. But it's certainly, I think, to what you were saying, and our experience has also been that it's certainly not the case. But I think they're just trying to kind of navigate some of these additional things. Maybe just as a final thing, Mila, maybe just to change direction a little bit, because this is, I think, it is relevant, I think, to the energy discussion, but also, we haven't really talked about the S or the social part of the ESG to the extent that people still like to use that sort of framing. I'd love to just briefly touch on AI, because I think you have done some really interesting work here. And, for us, it's interesting, like from a climate perspective, because I guess in a narrow sense, the data centers that run AI use a lot of electricity, and there is a huge debate about affordability kind of emerging in the US, and at the same time, a lot of the sort of fastest solutions to adding new generation are renewables. And so there are many interesting little interactions between climate change and AI. And then obviously, of course, we certainly don't know what will happen, but the sort of social implications of AI, whether it comes, from white collar job losses and to just give one example. So yeah, so we've been effectively, investing in a lot of the companies that are trying to help on the power side of things to provide, hopefully the lower carbon emission technologies that help power a data center or to help it run more efficiently. But you've been doing a lot of work on AI and its impact on investors, I think. So I'd love to just maybe just in the last, as sort of a last question, just to understand, the work that you're doing with AI and investors, and maybe that could be the teaser for our next podcast.
Well, I actually think this is the next systemic issue, like climate change, that the markets need to be considering, and they are highly interconnected as well, right? So to your point, lots of the points you brought up are part of the infrastructure, et cetera. But one of the things, so I mentioned earlier that when we're asking these questions about where are your top 3 ESG focus areas, to a very significant surprise for us, was that the governance of AI is really one of the top issues that's come onto the radar from where the investors are, focusing their energy. So ironically, that came on, and we had already planned to ask questions to the participants in December. And so really interesting to see that in Canada, that 94% of those investors we spoke to are already using AI for some level of issuer analysis. Okay. 61% indicating sort of moderate to extensive use. So the other message that we heard is that 2026 is really the year that there's this intention to roll it out with more usage. So, from us, we're sitting here going, wow, okay, we thought mandatory disclosures might be our next driver, like that's the driver. I am actually questioning whether the use of AI by the institutional investor community in particular, as that adoption comes on quickly. And the reason that we hear that investors are doing it, one, yes, it's to save time and productivity, but it's also trying to really understand the disruption that is going to take place by all businesses by the adoption of artificial intelligence. And that as investors, that is your role, right? Your role is to understand this. So it's using the technology for your, with regards to risk management and issuer analysis, et cetera. And actually, it's one of the things that we talked about was in this environment where everyone's being very cautious about what you will say into the market, that silence actually may become a very significant risk, both for issuers and investors. Because if you're not communicating out, then these AI models are in a position they like to make you really happy, Mike. So, they may create false information. And so we're finding, this is how we're looking at this, and we're going, listen, like as an organization, you want to make sure that you're controlling your messaging. And as an investor, you want to have confidence that that business is putting the right information into the market, because that will give you a sense of confidence as you are, increasingly using AI. So yes, there's, the environmental impacts on water, on carbon, on GH3 footprints, just on the grid capacity, right? I was listening to something this morning about where Meta is bringing in this, major data center, and the local communities don't want it because they're concerned about their water. Right.
Yeah.
So it's just such a great example of how all of this comes back together. But I think the most important thing around the adoption of AI is the speed at which it is starting to be adopted. And so therefore, we come back to what we heard most from the investors was we are looking now at the governance of AI in the companies that we invest in. How is the business managing this? How can we get comfort that they are doing the right things? And I think that's where we will see sort of this growth in the responsible AI for responsible investors. I think we're on the cusp of something
Yeah.
like that coming soon.
Yeah. And I think it's interesting. Like it's something like a lot of what you were just talking about around using AI, taking it sort of a little bit more from that sort of sandbox, let's play around with this internally for a particular function, and to then, do it in a more like systematic way. And then, yeah, as you said, like I think we've all experienced this, the where, you ask it a prompt and, you start to trust it more and more, but then you realize that sometimes it's just, just hallucinating and making up
Mm-hmm.
things, which, yeah, all of that is things that we have experienced as well. And I think it's obviously you got to be paying attention to what you are actually doing here. And I really wonder, for us, we're quite a concentrated manager. Like we're investing in, each portfolio is between 20 and 40 stocks, let's say on average. And across our whole
Mm-hmm.
organization, there's less than 100. But for a really large, for an investor that has, I don't know, 2,000, 3,000 public equities in its portfolio, it's very tempting to use AI, but your ability to then actually monitor what it's actually putting out for you and because you're using that to make decisions, does make it harder. You do probably need to be more reliant on it in that sense. So it's yeah, fascinating area, and I'm sure there's many more things to explore there, and I'm sure in a year
Yeah.
it'll all continue to be quite different to even where it is today.
Yeah, I agree. And, some of those major global index players, we won't name names, but, they're 3 years in already, right?
Hmm.
And again, whether the information's right or wrong, it's the market will trade, right? The market will, as
Yeah,
there's a lot of a variety of
yeah.
players, so it may just lead to increased volatility overall.
Hmm.
We've already seen some research coming out of Gartner, I believe it was Gartner anyway, talking about the amount of extra time that CFOs and investor relations professionals are already spending in engagements because as investors are starting to use AI, that there's wrong information.
Yeah,
So,
yeah.
like there are many implications, and I think we're just in the, first inning, shall we say, of the use of AI, and I think that's where the investor interest is coming from is, okay, how is this being managed? Who's doing what? Um, do we have a good handle on, does the business really have a handle on these issues?
Hmm.
And
Hmm.
more to come, I think, on this one.
Yeah. All right, Milo, this has been really fascinating. I think we've touched on climate change, we've gone to AI, we've talked about the kind of governance of it. So I think we've at least in the traditional framing, we've at least touched on really the three elements of the environmental, the social, and the governance. And I'm sure that there's many more things to talk about here. Could probably go on for another hour, but I'm conscious of your time and just wanted to say thank you again so much for coming on our podcast. It's been a real pleasure.
Thank you so much, Mike. It's been my pleasure, and happy to build the bridges between Canada and Australia. All right. Have a great day.